to the Pulse Collective podcast.
Hello, everybody, and welcome to today's episode of the PCP, otherwise known as the Pulse Collective podcast. I'm your host, Shahrukh Ansari. For those of you just watching or listening for the first time, we are Pulse Collective, who is a growth partner for businesses all across the country. You're in Canada, you're in the United States. We will help you multiply your revenue and unlock your potential through AI-powered systems. A lot of people, if you go online nowadays, will promise you a bunch of things. So if you are in the market trying to see how you can take your business to the next level, drop us a message down below and I'll have one of our consultants reach out to see if it's a good fit. Now, today, I'm joined by Tomas Miller. Otherwise, we'll refer to him as Tom today. He's the founder and CEO at EQVista, which is a company that's actually helping startups and private companies manage their equity through cap tables and valuations with very modern and very accessible tools. Tom has built EQVista into this platform that helps serve founders by navigating one of the most complex parts of building a company, which I'll let him get into a little bit more, but it's really investor transparency. Tom, I'm really excited about having you onto the show today. Welcome, welcome. Can you kick us off by just sharing a little bit more about you, your background, and also what EQVista is all about?
Yeah, so what we do at EQVista, we manage stocks, and most importantly, we give stocks price to companies, mostly VC-backed. Going back to your original question, how I started, I have a double master degree in economics. After the school, I moved to Beijing, worked for a software company, and then when you do business in Asia, it's always better to start in English-speaking environment. And mostly when you have a common law is very important for setting up a companies. The processes are the same as we have it here in Canada or United States or UK, Singapore. All you need is just a director, a shareholder, one-man show. A company can be opened in 20, 30 minutes. And you can just get off the ground and build whatever you want. And I think that's the fundamental for any society to launch a business, the freedom of capital. So I started in Hong Kong, and ironically, we were helping with Incorporations, meaning when you wanted to launch a startup in Hong Kong, then we can build a worldwide platform. But we started with Hong Kong. If you wanted to start in Hong Kong, we were the first platform in which you would get your company off the ground within 20, 30 minutes. So you could set up a company in 20, 30 minutes. Back then we started 2010, about 11, Hong Kong, then we moved to other jurisdictions, BVI, Seychelles, UK, Ireland. We did a lot of different jurisdictions. So that's how we started. That's actually where I got my background, finance background, and then we moved the company we actually acquired one of the largest registered agent in Nevada, similar thing to what we were doing in Hong Kong, Incorporation business. Again, became more about compliance because now we do mostly focus on checking the clients whom we onboard. I might say that in Hong Kong, we became the strongest platform out there because we built our own compliance software. So it's not just about getting direct shareholder data, but it's a lot of due diligence. So you need to check a lot of boxes before you onboard clients, specifically against AML. So the AML, it's a massive standard. Any fintech company, at some point, we were like, hey, we actually operate a bank. So we had the same criteria for bank accounts. So that was 2020. And I was looking at our AML process procedures, like KYB, know your business or know your client, KYC mostly. That's how people know that. It's like, wait a minute, we actually have the same onboarding criteria as we have for a bank. So we started neobank, Checkly. Besides, as you mentioned, EQVista, and that's equity management valuation company. Yeah, that's how we started. So we started with simple service incorporation through auditing, acquisition, growth through acquisition, building towards what made more sense, and that was mostly the equity part. And luckily enough, and I think that's our biggest. Well, I think so. The clients say is the valuation. So we have one of the largest 498 valuation team on the market. We process over $5 billion in clients' equity monthly. We are launching a feature. It's called real-time valuation. So we will be able to process stock pricing in real time. We will be able to price practically the whole private market.
That's
So
awesome.
our 2.0 feature will price 6-7 trillion. Yes, T with T for tall. That's practically the value of 1,530 unicorns on the market. So launching that feature. Yeah, so I know that I stretched the answer a little bit, but I think it's just very important to understand, when you have a business that you don't just stop with one simple service or just keep rolling tirelessly.
This is actually really good because for a lot of people who are getting into a service-based business, myself included, when I first started, where obviously we branched out in our service offerings now. But for a lot of people that come in, their biggest barrier that I've noticed to start is you do too many things at one time when you're just beginning. And once you do that, you kind of just overcomplicate the actual process. So you're saying now, of course, you guys are a multi-billion-dollar company who has processed billions and billions in
Yeah,
transactions.
yeah.
But when you started, you were just incorporating businesses. So that was the one place that you started.
Yes.
And now 10, 15, 20 years later, you've diversified. And now every single year, you're probably thinking about what else can we add to make our platform more valuable for the customer.
What I think is very important in any business, and I tend to think of like, what I really always like, and you might probably appreciate it because you are from the industry, the guerrilla marketing. Just to be super smart about things you do and try to not do many things, because you can bury yourself quite a bit. I just to become a dominant in one specific segment, and just go very, very aggressively, hungry, and fearlessly to become number one, in that industry. I think that's painful. It hurts like crazy. It's a lot of you question yourself quite a bit. But I think that's the goal. As an entrepreneur, you need to just be
So I
deep.
think a question I would ask you for a lot of your target clients, people that are looking for your service, what would you say are the top, like if you had to just give it to somebody that doesn't know anything about finance, what are the top problems that these people are facing in their lives right now that your solution is going to solve?
You know what? I think it's the price, the stock price. We have a table, but it's a thing where you issue stocks. We gave it for free, right? That's very important. The cap tables should be free. You can charge for compliant things, but for us is the price, the stock price. Public market has very transparent pricing. And what we see now is that companies, funds, schools, universities, they have endowment funds. They don't really understand the importance of the valuations. So they might manage to $3 billion and being invested in the private market. They just guess the valuation of the fund, right? They usually undervalue just the portfolio for one very simple reason. It's a risk. But they go out and they actually borrow from the institutions. They do so-called leverage funds. But for that particular reason, you need to know how much the asset is worth. What if the asset is worth double or triple? That's where we see that's what we see the most as the most important product for us now, and we are going super deep. It's tempting to go for us to secondary market. We got multiple offers to go to secondary market. The first goal for now is to build pricing infrastructure. So everybody understands, the whole private market understands what's the price of the stock and being transparent.
I would have two questions for you just on this exact subject, because you're operating in a space where there's probably a few established competitors that have also been in the space. So how, in your messaging, how do you differentiate what you're doing from these people that have been around for a very long time as well?
You know what? I think I can cut it to different phases. Fortunately enough, we have faced phase two. It took us 5 years, but the first phase was that we have a brilliant customer care. The customer, they don't, for some reason, they forget about the reason why they're building a company. They're obsessed with tools. They're obsessed with AI. They're obsessed with, a website. I'm extremely proud. I'm actually extremely proud that we have redesigned our website after 7 years.
Nice.
The same website for 7 years. We were just heavily focused on building, becoming the domain, the equity domain. So for us, how we make sure that we are better looking to just customer care. We are extremely fast with consulting, development, delivering the product, delivering the report, for instance, right? So we are very hands. And that's embedded in the culture. So we have 50 employees in our company, and all of them understand that there's no freaking way that, internally, you're going to from your colleague in the same hour or 20 minutes later or 10 minutes later. We are super fast, right? So we have a physical offices, but they're scattered. So for us, it's just extremely important to be fast. I think the speed is the number one, and number two, that's the second phase we are in, is the product. And again, I'm mentioning the real-time valuation. So the stock price in real time, so you can see for those who don't know what it is. So you can see the stock price of your company in real time. Multiple reasons why you should know the real-time price: possible acquisition, possible fundraise, stock issuance. So you can motivate your employees like, hey, look, the stock price was 12 months, $2. Now it's $6, and it's on the paper, it's in the graph.
Right.
Log in, check it out. So I think you start with fundamentals as entrepreneurs to be just better as a human, and then you move to deep products. So for us, the real time. So we give the cap table. It's a full feature cap table. Nothing worse, nothing than the best, one of the largest competitor out there. And then the real time. The real time is something we will deploy for every single privately owned company out there, not just VC back, but it's gonna be for everybody. That's
Got it. No, I think you touched on two things as well, like while you were speaking on that. The biggest thing that you said right now was actually you brought up how companies are looking at AI, and AI is starting to kind of change. Definitely, I'm noticing it in the SaaS space, which is a lot of the clients that I work with. I'm seeing how AI has changed a lot of the ways, even that they think about their investments for their budget cycles. Like they're not looking to continue with specific processes that have been manual. So if there's like a review process, a data analysis process, AI is coming into that space. As somebody that's not in the equity management sector, but I'm curious to know, like, just from an overall holistic industry perspective, how do you see the industry has evolved as AI has entered the picture? And how do you see potentially opportunity over the next few years for yourself in that space?
so for us is it's again the speed. I think the speed in saving the cost, so you don't have to hire multiple analysts. It will be always analysts first, because people. So that was our largest client, $22 billion valuation. They need a lot of care, a lot of consulting, a lot of assurance processes. So we have valued over $300 billion in clients' assets. So the processes are, you can tune them with AI, make a lot of things easier. How you leak documents, how you scrape data, you benchmark against your own data, because we have the largest data set out there. That's probably the most important moat for us against the competition. I'm just stating, at the end of March, we will be at $1 trillion clients assets valuation. Not necessarily our clients, but we are launching called EQVista. It's called EQVista 500. Yes, it's equivalent S&P 500. So we pick the largest 500 unicorns, and we will deliver the stock price real time. Mostly, it's mostly for secondary users, secondaries. So people will be aware of the pricing. What's good, what's extremely important is that, again, AI powered human deliver. We have an ACV8 certification, so we are certified by National Association of Certified Valuation Analysts. So we have to still maintain the human element for multiple reasons, continuity of the report. So if the Big Four comes to us and asks us like, hey guys, so what was the formula? How do you land at XYZ is stock price? So so that's what I think AI would need to play the role. The speed.
I agree. I think depending, I didn't know how it would be in your particular space, but I think the biggest thing I'm noticing with AI is people are jumping to replace their processes, but it's not meant to replace necessarily every single thing. It's meant to complement your existing processes to make them more efficient. What I would actually personally ask you though, is you're dealing with clients who are very large. They're essentially trusting you with their equity, essentially their data, and they're instilling that trust into you because you obviously now, of course, at this point, you have all these big clients, these large clients that work with you. But for somebody that's earlier in their startup process who doesn't have the proof and the trust that you built in your name, how did you handle getting those first few clients? Like, what was the process to make sure they could trust you first? I'm taking you back now.
That's a very good question. What I built multiple businesses. What's what I think is very important. You just don't really build just a website, but you also leave. I'm very pragmatic person, so I'll give you an example. So you on contact form, you just make sure that you have your phone number. If you don't have the ring central phone number, just you leave phone number and your personal email as the CEO, CFO, because mostly companies, they hide behind a curtain. Contact form is doing is that, like, I think it's, even though that around there, you have any complaint or problem, here's my personal email, I'm the CEO. I get like one or two every year now, so not that many, right? But just not to hide, it's extremely important, right? And if somebody writes me on transparency, yes, and if somebody writes me on LinkedIn, I read all the LinkedIn messages, right? I can get through 50, 60 messages like in 5 minutes, like literally like boom, 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 like 3-4 words. So I think the communication for any startup who's starting first, you just need to be accessible. Just anybody will approach you as a founder. You need to reply immediately. You need to be on top of when you're hiring, when you're getting a client, when you're getting investor, when even to your wild friends, we're pitching, always pitching. So I think the story, and then to convert clients, it's usually easy. I was always winning with the speed, and that we are extremely cost effective. I bootstrap all my companies, and the price and the speed always being, regardless of AI or .com bubble, you would have a website. Because I'm saying that is, every company knows AI It's like in the 90s, every company was internet company, even though you were selling for some reason, internet company. Same thing with
I think it's you made a really good point right now, but I think one thing that a lot of businesses personally struggle with is when they're first starting out. You mentioned something about being transparent and accessible. I think that's very important. But at the same time, for a lot of people, they don't have case studies. They don't have a portfolio. They don't really have for that first client who may want to see why they should trust you. You don't really have anything to kind of give yourself some sense of authority. So in that situation, what I've personally noticed is the best way to do it. I don't know if you're familiar with, I'm forgetting his name right now, Alex Hermosi. So Alex Hermosi, of course, like he's a staple in like just the sales space. And one thing that I've personally instilled into my entire team is that forget the case studies, because case studies, any business that asks you for a case study, of course, you're going to give them a case study that's going to make yourself look good. You're not going to give them a bad case study. But the reality, everything comes down to your offer. So the way you offer somebody, you mentioned you were cost effective. You mentioned you have very fast speed. So those were your differentiators. For a lot of businesses, the offer is the thing that people struggle with. So for me, for example, when we started, the biggest mistake we made is we had no case studies, and we were charging businesses, we were trying to basically 5K a month to run ads for them. It didn't work. It didn't work at all. So then we had to go back to the drawing board. And what we did is we're like, hey, we'll get a handful of clients. Let's just take a revenue share model. Let's see, once they make money, we'll take a small cut. And then
Did it work? Did it work?
Yeah, it ended up working afterwards. We signed a handful at the beginning and it worked for us. But the thing,
To interrupt, but at the end of the day, it's just about money. It's just quite interesting to see
yeah,
but the economy that must work, because like a lot of competitors, they raise a lot of money, right? And they have a unit of economics based on the revenue they need to deliver based on the multiples. So when you work backwards, like, hey, we really have to hit $3 million in revenue, right? But we need to have 1,000 clients. We have to charge them $3,000, right? So the multiples and the valuation really meets investors' expectation, right? But
absolutely.
what I really like about Bootstrap companies that with Bootstrap company, you just actually work on, hey, does it make sense? So I have this cap that was actually the cost to produce it, and then was actually comfortable business model to just basically sell it for, so we can have a money to pay employees, business development, marketing.
Yeah.
So that's extremely important. And what I have seen in these massive rounds is they just killed the product. So I think what you just said is that the shareholder revenue model. I know that you don't really necessarily need to raise money. It's just a common sense. I believe that that's something what people really underestimate and don't really understand how to apply the common sense to regular life. Which is
Yeah.
quite for me, who's it's staggering that the common sense.
No, I appreciate that insight too. I know we're coming up to about the 30-minute mark, so I want to wrap up with two quick questions, and then we're gonna wrap it up with a final one as well. But really, personally, Tom, just as the CEO and the one that's driving the ship right now, what is for 2026? We just started. What is your main objective, both from a sales perspective, a marketing perspective? You don't have to give me numbers like that are
Uh-huh,
personal,
uh-huh.
but what is your main objective to call 2026 a success for your company?
Can I start with the product? Yeah. So I think again, I repeat myself. The real time pricing infrastructure for the market, so we can hit $1 trillion by the end of the March. A and B, the marketing. Also, something I see people neglect a lot: marketing. Go to market, how to be visible, how to dominate certain space with my brand, with my product. So that's this year. So is the go-to-market. I'm obsessed with marketing, obsessed. I've bootstrapped multiple companies that without marketing, strong marketing plan and execution, you fail after the price and being fast is the third thing.
Absolutely.
Marketing.
Yeah.
You are in the business, right? So you definitely understand how important it is. That's what you do.
Yeah. You can't market but you can't market a crappy product. Eventually people will run away no matter how much you spend. You could spend thousands and hundreds of thousands and millions of dollars. I've seen people in my team that have managed $1 million budgets for marketing budgets. But eventually after 2-3 years, the company started declining because the product was not evolving constantly. So I'm actually in complete agreement with you. I think once the product is consistently improving and you're responding to what your clients are telling you, then the marketing you'll continue to evolve. I am curious for some of the younger entrepreneurs out there that are watching this who maybe are looking for one piece of sales and marketing advice from somebody like you who's been in the game for a while now. How are you currently doing your outreach? If you are doing outreach, do you have people reaching out to you? Like, how has your sales and marketing strategy evolved over time?
Funny enough, we just opened a sales office 7 months ago. So everything was inbound. Again, I was extremely focused on go-to-market, organic growth, initial goal. So I love marketing. That's what I think works the best. Sometimes I enjoy myself spent on these marketing hacks, right? But I should have more probably, but this is how I started. And I think if you just study, the scale of marketing, how you can scale and much as much as you can from $1, or even though from $0, it's just your time. Right? Like the digital economy is it's impressive, right?
Yeah.
My dad built advertisement agency, and he always needed so much money because he was in printing business, and he had to got so many loans, machines, and offset machines, and different printers, large printers, right? And you need to buy a building, and then you have a lot of assets, and after 7 years, you need to do it again. But here, 1,000 little things, and literally it is 1,000 little things every single day.
Yeah.
So then let's not exaggerate. Let's do 200. But
Yeah.
but after you do 200 little things, which makes sense, and you prove that it makes sense, you need to do it super fast. After 200 little things you do every day, by the end of the month, you are at 6,000 things you have done to improve your company. And it really just works. It compounds.
Yeah. I think really quick on what you just said, I think marketing now, especially in the digital economy, we are no longer competing for people's money. We're competing for people's attention. And the biggest thing is
Yes.
I've had clients of mine who have paid tens of thousands of dollars every month for marketing, like they're paid advertising online. But I've had a client that paid less than that, but they wanted to do social media. And we made a few TikTok reels or Instagram reels, and their return was 10 times more. So it's not necessarily the amount that you're spending. It's more the channels that you're using, and you're actually reaching the people that are looking to purchase your product, because we have access to everybody now. And that's the reality of it. You can target very specific, or you can keep it very broad. So I find I'm very passionate about this topic because I think for every business, it's it's something that you can lose a lot of money in, or you can take your business and 2 or 3x it. So I have one last question for you, Tom, before we wrap up. Now, as the CEO, of course, you head everything, but you're looking at the direction of the company as a whole. If you had one magic wand that you were holding, you're like Harry Potter, one day you woke up and you were like, I want to cast this spell and change this one thing that's happening within the business, or not necessarily within your business, but within the industry as a whole. What would that one thing be that you would want to change?
I think it's access to the capital. how small entrepreneurs access to the capital. Again, digital economy, the parallel here is my father's business. If he bought a printer, right, it was an asset, so he could get a loan against the asset quite easily, right? Even though without revenue, which is crazy, right? Where a digital economy, unless you have some revenue, right? Some revenue, you can't get much money from the banks. I know there are platforms out there. I know that the collateral for the banks are extremely important. But the magic here would be, I like these people. They do amazing business. They have amazing ideas. Why we don't, support them with a loan, right? Which or anyway.
Yeah.
So I think a like a better mechanism where I would say not even those small and medium. I would just say small, literally startups have access to capital, without much hassle. I think that would be my wish for everybody.
Do you see yourself evolving 10 years from now where you become kind of like a bank as well, where you start giving loans?
We have a bank. We have a bank. So I think we're gonna focus more on equity lending. So we understand businesses. We understand what the equity is worth. So there's a product called venture debt. So usually use this low tip loan where when you are financing from investors, the bank says like, hey, you just raised $15 million and come with 1/3. So they give you $5 million. So it's venture funding, venture loan. So it's that's the first thing. But I think once we all understand that the digital economy, let's say $5 to $8 million revenue company, a need to get the money, and they don't have a printer, something tangible, and they can get the money against the equity in the company, right? I think that's the future, because at the end of the day, banks still have to get some kind of collateral, but I think that's the future, because no more tangible assets for all of us.
Yeah.
And especially, for instance, think about what we have all these crazy influencers with $2-3 million, $2-3 million followers, crazy returns on investment in terms of the videos, right? So how do you value the asset? Like there's no asset, right? The asset is just digital footprint. So I believe that based on mechanism, but actually thinking kind of about we can understand the value of the company, precise value of the company, extremely precise, and we counter a risk, and we can get a equity financing against the company.
Absolutely. I wanna wrap up, but just replying to what you just said, I've had CEOs I've spoken with where I've had to ask the question, what is your current revenue that you're operating at? So we can make sure that it's a good match for us to work together. And a lot of them actually don't know. That's the crazy part, because they actually don't have visibility. They may know how much money they're making, their ARR, but they don't actually know what their bottom line necessarily is. So what I like about what you guys are doing is you give visibility to that. The valuation is very, very easy for somebody to track. And I personally seen it firsthand. So I'm wishing you nothing but the best. I'm also want to congratulate you as well for all the success that you've had with the business. To wrap up though, Tom, like where would be the best place for people to find you online? If you have a website
They
or a
can.
link?
Again, LinkedIn definitely, as I mentioned earlier, answer all the comments or direct messages, instant messages, or at Tom, Tom, at EQVista.
Absolutely. I connected with you myself on LinkedIn as well, so we'll definitely stay in touch. But thank you so much for your time, Tom. I really appreciate it. And I'm wishing you all the best and success in the future as well.
Thank you. All the best. Thank you. Cheers.
See you. We'll stop recording.